It's tax season and you're probably wondering how to get your tax forms off of Robinhood. I'm Jay Jones and this is Jonesing for Stocks, and in this video I'm going to show you how to get your 1099 and a quick understanding of what it is. Now when filing your taxes, you need to include all sources of income. That's where your 1099 comes into play. Your 1099 is an IRS form that includes some sources of non-employment income. This includes your dividends and interest. Now, in order to be eligible to receive your 1099, you must have had a taxable event in the last year. This could be selling stocks or options, receiving dividends or interest, and you can also get your 1099 for selling your cryptocurrencies. And you won't receive one if all of these four apply to you: receiving less than $10 in interest or dividends, didn't sell stocks or cryptocurrencies, and received less than $600 in miscellaneous income. Now, to find the location of your 1099, you're going to follow these 3 steps. Go to your account, statements and history, and then follow the tax documents. Now this is going to be same steps regardless if you're on desktop or mobile. Now first you're just going to log in, click on account, and go to the statements drop down. And under your statements is going to be a tax documents section. Now if you don't see last year's 1099 there, it's because Robinhood doesn't normally release them until mid-February. And if you sold cryptocurrency, you'll have 2 forms, one for your stocks and the second for your crypto. Now, if you open up your form and you don't know what you're looking at, Robinhood made a little helpful guide to help you understand what you're reading. The link will be found down in the description below. Now, on the first 2 pages, it's summarized into 4 subsections: DIV for dividends, B for crypto, INT for interest, and miscellaneous. And the remaining pages of this form will be all of the trades you made. That's why it's important for you to track and monitor your trades just in case there's any discrepancies with Robinhood. Now, if this is your first time learning about stocks and taxes, I think there are 3 things you should be aware about. Now, the first 2 are long-term and short-term capital gains tax. Now, in order to be eligible for the long-term capital gains, you must hold an asset for over a year, while the short-term is anything under that. While the long-term capital gains tax has a lower tax bracket than the short-term is taxed just like ordinary income, where in most cases it's up to 37%. And the third topic is the wash sale rule. The wash sale rule is when you're down on a stock and you purposely sell out just to buy back in to receive a tax loss. You can even see the wash sale on your 1099, so it's important you know about it. And if this video gave you any value, don't forget to like and subscribe so I can continue making content just like this.